global cues this morning. In U.S. stocks, they fell on Monday as political turmoil in Europe cast doubts on the Eurozone's ability to push through measures to end its debt crisis. Now, the renewed worries came as the Eurozone's business slump deepened at a far faster pace than expected in the month of April. Bank shares were hit by the concern. Walmart slumped a good 4.7% and was the biggest drag on the Dow after a report said that Walmart officials stymied an internal probe into bribery allegations at its Mexican unit. Finally, on closing bell, Dow Jones lost about 100 points. The S&P 500 index was down 12, and the Nasdaq Composite as well lost about 30 points.
Dow is below 13,000, Nasdaq is below 3,000. Global volatility has shot up. Copper prices have plunged. Gold prices are stable. So these are flavors or clear, indications of risk-off trade which is at play. Global volatility is now almost at 20, which is never a very encouraging sign. I just want to check in on Asian markets, and if you check on SGX is up 45 points. But my sense is that will change. That's Hong Kong for you, up 121 points, followed by Japan, which is down 35. And if you look at other smaller markets, Singapore is holding on, and Kospi is down by about 3 points. So the silver lining this morning is that Asian markets are thankfully not picking up from where US markets had left last night. Douglas Blake joins us, Senior Wealth Manager with Newbridge Securities. Douglas, looks like fair trade is coming back and money managers are slightly disturbed given the way how politically things are moving in France.
Absolutely. A lot of new uncertainty coming into the markets. France is definitely a wild card, something that we probably didn't have factored in the equation. Sarkozy losing the first round of the election for the first time in the history of these types of elections, going back over 50 years, where the incumbent lost the first round. Also, I think the names out there on the ballot scare us a little bit. We hear words like socialism, and certainly that gives capitalists like those on Wall Street some pause. But I also think that the German manufacturing number coming in at the worst level in 3 years, the biggest drop in 3 years, that's very alarming. That's a third of the Eurozone, Germany. And if they're going to fall off a cliff, then there's little hope for the rest of the Eurozone, unless really drastic action is taken. So this is all being worked into the model. We're having a decent earnings season thus far. And, frankly, we're taking profits from a very strong bull market rally that we've seen that's gone back 6 months, added nearly 30% bottom to top in the Dow, S&P, and Nasdaq. So at this point, it's a healthy correction. But just like a rally, you never really know when it's going to end. So, the uncertainty is definitely back on Wall Street.
Douglas, you got earnings from Apple, and all eyes really are on that one, considering the futures as well have been boiling. What's the street expecting from Apple this quarter?
I'm sorry, I'm not really familiar. Apple, that's obviously a joke. All eyes are on Apple. No one's talking about anything else. This is a stock that in the last 3.5 months is up 200 points, is up 50%, and has now just experienced a correction where it's down about 10%, a bit more now off of its highs of 644. That, of course, the all-time high. Going into a quarter where expectations are extremely high. Now, with Apple, you kind of have to use a different set of metrics. It's already priced at a very fair price compared to the S&P 500, so it's not as if it's aggressively priced to perfection. But that said, this is the company that can do no wrong. So the bar is set very high, and not only that, we're expecting them to blow the doors off of this number. If we get anything short of that, this sell-off in Apple shares can continue. Let's face it, you could sell this stock all the way down to 400, and it'll still be back where it was when the year began. And it's a very crowded trade. We're sure they're going to deliver great numbers, but will they be great numbers by Apple standards is what we'll all be watching tomorrow after the market closes.
Well, Apple indeed is a very crowded trade. If I look at the market capitalization of Apple, and if I add Microsoft and Google, Apple is still higher. Douglas, the fact that Nasdaq is struggling to stay above 3,000 and Dow is struggling to stay above 13,000, do you think we are in for a rough summer ahead?
Every year I write down on a Post-it and I put it on my desk, sell in May and stay away. And every year around April, you kind of get sucked in by the momentum in the market and the valuation. The last 3 years, sell in May, stay away has been absolutely the right move. And quite frankly, this year is shaping up to be no different. That's not to say that there's not, money to be made. Look, we have the Facebook IPO coming in the next few weeks. It's going to be a very exciting time for the markets. But a lot of the easy money, at least for this leg of the rally, has been made. No one ever went broke taking profits. And the problem with a low-volume rally, like the one that we've seen in the last 6 months, is that when it's time to leave the party, there's a very small door that you have to fit through. I'll quote the great Jesse Livermore, who's known as the Great Bear of Wall Street from the Depression-era days, when he said, if you're going to panic, do it fast and beat the crowd.
Okay, Douglas, good to speak with you and appreciate you taking the time out and joining us today on ET Now.